is your net worth? What is the measure that you'll give the asset value that is in you? Because net worth is the balance of assets that remains after after taking care. What is your worth? What is your balance of value? What is your value? What is your asset value? What measure do you give yourself as your ability to generate money, incomes? Are you at the right position? Have you attained your expected net worth, or you are lagging behind? Do you know how to value, how to determine your net worth, the expected net worth, so that you compare to your actual net worth and consider the course of actions that you need to take in order to attain your expected net worth? Welcome to our today's episode in determination of our net worth and the actions that we need to take to get back to the right course after the next 3 seconds. So welcome back. If you are with us at this point and you are new to the channel, kindly subscribe. So what is net worth? In finance and accounting terms, net worth will be the total assets minus your total liabilities or obligations. The difference that you get is your net worth, which can either be positive value or a negative figure. You're supposed to have a positive net worth all throughout, because a negative net worth means that you have accumulated more debt than your assets. And in this world of today, where we have so many mobile platforms that are or online creditors who don't really look at your net worth, you are likely to find yourself in a situation where you have already exceeded, your liabilities exceed your assets, which is a very dangerous position. Then there is the average expected net worth that depends on your age and your annual income, which should be a measure of your progression in wealth building. We look at the actual net worth that we have already determined. You take your total assets minus your total liabilities. Then compare that with your average annual net worth, or your average expected net worth, which you will calculate by taking your age, divide by 10, and multiply by your annual income or annual average income if your income is irregular. And this we are taking the gross value. If you are younger than 40 years, you have a longer period of taking actions, corrective actions to your deviation in your average expected net worth. So we divide by 15. We add 5 to the 10. So calculate your expected net worth. Take your age, divide by 10, multiply by your annual income. If you are younger than 40 years, divide by 15. So let's use an example. Let's take a guy who is earning 50,000 and we are taking an age of 40 years. The annual income of this person is 600,000. So if you calculate the expected net worth of this individual, we are taking 40 as the age, divide by 10, and we multiply by 600,000 as the annual income, which results to a total of 2.4 million. So what should this individual do? They should calculate their actual net worth. Actual net worth, as we have indicated, is personal. You know your assets. Take the total. You know your liabilities. Take the total. Deduct your liabilities from your assets. The resultant value is your actual net worth. Compare the actual net worth and the what we have calculated as expected net worth of 2.4 million. The value that you get will tell you whether you are in the right course in building your wealth or you are lagging behind. So what do you do in the event you realize you are lagging behind or your actual net worth is less than your expected net worth? What you do is catch up. You do catch up investment or catch up saving. You increase your savings to build your assets, to match up your actual net worth to your expected net worth. Then another aspect is when now we bring what an asset is into this perspective. That an asset is any resource or item that has a value and ability to generate money. The reason why we say a personal car is a liability is if it is not generating money but consuming what we are making through other means. If we were using the car to make money, it becomes an asset. So, actual net worth in a wider scope will not just include what you have amassed. We would look at what you have that you can monetize, because you are the original important asset. In order for you to acquire that piece of land that you want to tell us is an asset, in order for you to be able to build that rental property which forms your asset, in order for you to purchase that bond, purchase that treasury bill, accumulate that money in your money market fund or in any other high yielding account, that money, that capital originated from you. You actively engaged yourself to make money. So you are the asset that we need to talk about at this point. Because in financial independence, it is the other assets that have come out of you. The rental property, the bonds, the fixed income securities, the stocks, the accumulated assets that make money passively that you can use to settle your bills. You are the asset. There are other things that you have besides what you have accumulated, and an accountant or a finance guy like me will calculate as assets. You have your skills that you are monetizing to make money. That's an asset. You have your talents that you can monetize. That's an asset. You have God-given abilities, a voice that you can monetize and make money. That's an asset. You have people, your level of influence. Look at how many followers you have in Twitter, the followers you have in Instagram, the subscribers that you have in YouTube. And I remember, if you are new to my channel, please subscribe. The subscribers in YouTube, the followers in TikTok, and other social media, that shows or measures your influence, and especially the organic followers, the organic subscribers. You can convert that traffic and monetize it. That's an asset. That is an asset. Then look at your time. You have time. Time is asset. Like they say, time is money. Time is an asset. Your health, your good health, that's an asset. You can't generate money. You can't do much in a sick body. So we look at the wider scope of your net worth. Shall encompass the assets, physical ones, and the monetary ones that you have accumulated. And on top of that, you have to look at the asset in you. That's your worth. That's your net worth. Your ability to generate money. Talents, skills, people, your health, your time. And outside that, now we look at your incomes in totality and expenses. So determine your actual net worth and your expected net worth and devise modalities to catch up. Because if you have a difference, you lag behind in actual assets or in actual net worth compared to your average net worth, what you need to do is do catch-up investments. Do catch-up saving. Increase your savings and invest to build additional assets that will bridge that gap to attain a financial freedom faster. Because at the end of the day, the average net worth is what will ultimately determine the extent of the financial freedom, financial independence to you as an individual. Thank you for your time. Subscribe to the channel, share that video, and if it has value for you, give me a thumbs up, because the algorithm in YouTube will use those parameters to share this information to other people.